Hello everyone. In this video, I would like to introduce you to the hedge strategy. Unlike latency arbitrage, this strategy does not use a fast feed and instead compares quotes on two accounts. The strategy is simple. It's a classic hedge strategy. Therefore, two quotes are compared for a certain instrument and two hedge positions are open. The buy position is opened on an account with a lower price, and a sell position is opened on an account with a higher price. Next, we wait for these orders to go into the opposite situation. When the price on the account in a buy position is higher than that of the sell, these orders are closed and we take the profit. This strategy is universal and works with any brokers. You are also able to combine in one strategy different brokers and different exchanges. However, you'll need to make a note that having different accounts is important. If you're using the strategy on one account, the quotes will be the same and you'll not see any arbitrage situations. So there's no point of doing this. Today I would like to show you how to do the setup on an example of two Forex brokers. These will be CTrader and LMAX, and that I added the sessions for already. And I'll also added 3 instruments in each session. It will be the currency, in this case the pound, gold, and Dow Jones. So next we'll go to the settings. So in the settings, we'll go to the strategy tab, click add strategy, and in the menu that appears, we'll choose the hedge strategy. Once we click OK, we'll be greeted with the settings of the strategy. So the first thing we need to do is set the sessions that we plan to use. And in our case, we'll be using LMAX as the session 1 and CTrader as session 2. And here, as you can see, we can look at more settings, but we'll go over these later. So here we'll just click apply our changes and save our changes. And we can move to the instruments and orders tab. In this tab, you'll be able to add hedge pairs. So to do this, we'll right-click the context menu and click add. And you'll see a window pops up that describes the properties of the pair, as you can see here. And in this window, we can choose the symbol which we would like to trade. In the list of each of the sides, we'll have a symbol list. And here you'll see the symbols which are active in the sessions which you selected for each of the sides. On the first side, we have LMAX. So you'll see the open sessions in LMAX. And on the other side, we have the same for CTrader. It's also recommended that you set a label, and this will help you identify the pair easier. And this is helpful when you have, for example, many different pairs. So you can see in the label box here, you can set whichever label you'd like. So we'll do this and click OK. And we see that the pair is now added to the list. Here you also have many important settings for your convenience. Here we'll add the remaining pairs and continue discussing. So the pairs, as you can see, are now added. Let's double check. We do this, click OK. Okay, perfect. So we're finished adding all of our pairs. And in the enabled column here, you have checkboxes which allow you to turn on and off a pair from trading. And in this case, we'll enable all three. The offset calculation column allows you to turn on and off the offset on a certain pair. And in this case, we'll only need this for the index, so we'll turn it on for the Dow Jones. So we do that. And the next is the label column, which is the indicator of the pair. The symbol column, I would like to point out that in this strategy, you're only able to combine the same instruments, pound with pound, for example, and gold. And if you add it for different instruments, it won't work correctly. We also have the lot column, and in this case, we have a fix API account added. And these have their own specifications, and I'll also be going over that. So let's stop on the lots and discuss that. So unlike MT4 and MT5 brokers, Fix API use full lots. So for example, 1/100th of a standard lot. And a standard lot, as you know, is 100,000. So since this is the case, we'll need to set this to 1,000, which on a Fix API account will be equal to 1/100th of a lot on an MT4 or an MT5 position. So as I said, some Fix API brokers have their differences, and LMAX, this is the difference for LMAX. And they have their own lots. So for LMAX, 1/10th of a lot is equal to 1/100th of a lot on MT4 and MT5 accounts. Regarding metals and indices, the standard lot on most fixed API brokers is one contract. But I want to point out that contracts will have different sizes, and some have standard and non-standard contracts. So for all pairs that are in currencies, you really need to be sure of the specifications for the contracts on your broker. So you have to make sure that you are putting that in correctly. So now that we've gone over that, we can move on to the difference to open and close columns. And these are probably the most important parameters for this strategy. The difference to open signifies the difference that needs to be reached in the two accounts for the order to open. And the difference to close, it is the difference between the two accounts needed to close an order. So that should be pretty easy to remember. And we will set these parameters for all of our instruments. So let's do that. For pound, we'll put 20. For gold, we'll put 30. And for the index, we'll set it to 300. Next, we have the slippage columns. And these columns basically allow you to set the highest allowed slippages. And if the slippage is higher than the number that you set, the order will then be rejected. And you need to remember that the slippage columns only work for limit orders. So if you're using market orders, the slippage parameter will not have any effect. So if the slippage is higher than the number that you set, the order will be rejected. That's what you should remember. And also the type of order really matters. And the next column allows you to set the maximum allowed spread. And if the spread is higher than the ones you've set, the arbitrage signal once again will be ignored. And the same thing is going to go for the min spread. And the min spread allows the trader to set a spread, which is the minimum for the order to execute without getting rejected. So very similar to max spread, but on the other side. So we will also discuss the offset column. And the offset column, you can set it manually or it will show the result of an automatic offset calculation. And the final column is statistical parameters, which show the current difference, the maximum difference, and the spread parameter. So all of these columns we need to set up in order for our program to work how we would like to. So the symbols that we have already been set up. We also need to set the spread. And then we can click run. So we've put our spreads in. So we'll click run. And as you can see in the current and maximum spread columns, we are already seeing values. And this means that everything is set up correctly and the strategy is ready to work. As we have Dow Jones in our symbols, we also have automatic offset calculation. And the value will appear here for the first time when the program recalculates the offset. So this is not a cause for concern. And as we can see, the offset has been calculated, and we see that the difference is now shown in Dow Jones. And in the offset column, you can see the offset values for the selected pair. As an example, let's open the Open Deals tab. And in the Open Deals tab in the bottom of the window of the strategy, you will be able to see all of the open deals with information regarding them. So the information that it will give you is the identifier of the deal, which is the label, the level on which this deal was opened if you are using multiple levels or multi-levels, the session, the symbol in the deal, the direction of the position, the lots, when it was opened, tickets, quotes, when the deal was opened, open offset, open difference, time of execution, and slippage on both sides. So you can basically see everything regarding the deal in the open deal column. And in the last column, we can see the updated profit of the deal. So profit will show up as green and losses will show up in red. So as you can see here, it is either highlighted red or green based on whether you've made a profit or a loss. And in the next tab, we can see a list of all the deals that have been closed. And here you already have the information about the time when it was closed, the price at which it was closed, slippage after closing, and the final results of the deal. There is also, however, a pending tab, and there will be orders that are pending for execution there. And in the rejected tab, there'll be a list of rejected orders. And in the summary tab, there'll be information of total profit by currency. So you can find details about your trading in all of these tabs. And it'll only show the total profit by currency if the method of calculation for profit is set to currency. And along with this, you can also view your trading history that can be found in the logs. And to access the logs, you need to go to the Logs tab, or you can access them by just clicking View Logs. And here you can find additional information about opened orders, and likewise you can find information about problems and issues that arose. So we'll now return to the settings for this pair and look at the rest of the parameters. We already looked at the symbols and we've already looked at the lots. So we can look at the slippage open and slippage close. So we'll go to the settings for the pair. So the slippage open and slippage close options are options that allow you to set the maximum allowed slippage in the openings and closings of orders. And as we've discussed before, these options only work for limit orders. So if you're using market orders, they'll have no effect. Dynamic slippage open and dynamic slippage close are similar options that only work on limit orders. And these options allow you to automatically set the slippage based on the arbitrage signals. And this will be calculated based on the difference between the value of the difference to open or close and the closing and opening price that the signal gave you. And I'll also give you an example. So for this example, we'll activate dynamic slippage open, and we'll set our difference to open and close to 20 units. So if the arbitrage signal is received with 35, we'll subtract 20 from this, and our allowed slippage will be 10 units. Not 10, I mean 15. So sorry. And these options allow you to lower the amount of rejected orders when using limit orders. So it'll be the difference between 35 and 20 that we set, which will be 15. And you should consider the fact that when these options are live, the open close slippage values are ignored as the dynamic values have precedence over the others. We also have the max spread option, which allows you to set the maximum spread to open an order. And the spread control basically allows you to set the amount of ticks during which the spread will be observed. And this is useful for brokers whose quotes tend to or can change fast. And this is the amount of ticks during which the spread can be observed. We also have the allow buy and sell options, and these allow you to set the direction of the order. So if we turn off allow sell on one side, on this side we'll only be able to submit buy orders, and only buy orders will be opened. And if both options are turned off, both types of orders can be and will be opened on each side. So this is if you want to restrict certain types of transactions on certain sides. So check quantity is also an option that is usually used only for crypto. And this option checks if there's enough liquidity at the top of the book to complete the orders. So if there's not enough liquidity, the arbitrage situation will also be ignored. We also have the virtual option, and the virtual option allows us to open virtual orders. This also allows us to use a hedge strategy on one leg, where the virtual option acts as a fast feed. And on the real side, the parameter for the order will be set in the order management panel. So I'll be showing this as well. So if you're using a hedge strategy on one leg with the virtual option acting as a fast feed, you'll need to set the parameters for the real side in the order management panel. And you can set stop loss, take profit, distance, and the units such as points for Forex or percentages for crypto. And along with this, you can also set the order lifetime. And for the other parameters, I know you can see some more here. You can read about them in the user guide, but the most important ones we have just discussed. If required, you can also set comments on side 1 or side 2. You also have the options of open and close leverage, which are only for crypto. And they allow you to set the leverage that's allowed on both sides of the orders. And the common tab has some parameters which are already known to us, such as difference to open or difference to close. And I'll remind you at this time that this is the difference between side 1 and 2 for the order to be allowed to open. The max difference to open and close allow you to set the maximum difference to open or close orders. So that is the difference between the two. And these parameters are mainly meant to protect you, and in anomalous conditions will not allow orders to open. So if the difference is too big or too small. We also have the min profit parameter. And the min profit parameter is the difference in points between the opening and closing price before the order is closed. And max profit works similarly, and it's when one side reaches the profit that you set here, the orders will be closed on both sides, and the profit will be taken. And firstly, the main point of these is they're used to control the difference between the disbalance between two accounts. And that's what usually the max and min profit are used for. The offset parameters allow you to set the offset manually, or you can also calculate it automatically if you have the offset calculation turned on. So as you remember, we have discussed and shown you this as well. And lower, we have the max deviation open and close. And the max deviation open and close are related to offset and allows you to control some calculations based on your different to open and close. And in more details about this, you can read about it in the user guide. We have it described there. So that totally depends on your difference to open and close parameters. The max number of lots allows you to set the maximum number of lots open for one pair and at the same time. the max number of deals are also allows you to control how many deals are open for one pair. And reverse open allows you to open orders in the opposite direction of the arbitrage situation. And reverse closed is usually used for futures and allows you to close the deal based on the difference to open rather than the difference to close. So reverse open will open the orders into the opposite direction of the arbitrage situations, and the buy position will be open on the account with the higher price and vice versa. The reverse close will allow you to close the order based on the difference to open rather than the difference to close. So usually it's the difference to close. In this case, it'll be difference to open. So that's a very important thing to remember. We also have the check direction parameter. And this is for when one pair has more than one deal at the same time, more than one order on the same time, then all future deals will be ignored. Will be open in the direction of the first signal, and signals in the opposite direction will be ignored. So this is also something to protect you. You also have an emulator mode, which allows you to open virtual orders based on real close quotes. And this is useful for crypto exchanges, which usually don't have demo accounts. But you can also use this for Forex brokers to test your configurations. So in this case, you can set slippage open and slippage close for both sides, and you're able to add more slippage to the emulator deals so you can make the emulated desk closer to reality. And you can test all your various parameters using the emulator. So you can see that this is where you can configure the emulator mode. You have slippage open for one side and the other side, and slippage close for one side and the other side. You also have commission 1 and commission 2. And these fields is where you can set the commission that is used by the brokers on both sides. And these values are important, and they're important because they'll be used to calculate profit more accurately. And you should also take note that commission is calculated twice. So it's calculated on open and on close. So if your broker takes 10 commissions, the commission of $10 per lot per order, you should set this commission to 5 because the whole order on open and close will be $10. And it's also important to note that the commissions can be set in points or as in currency. And this is all set up in the profit mode. And the profit mode basically allows you to change between the way the profit is shown. So as you can see, we have two things. There's points and there is currency. So points will be used for Forex and currencies will be used for crypto. And the currency field right here that you see that's blank is it allows the trader to set the currency profit that the profit is shown in. Perfect. So next we have the diff input options, and these options is because the hedge strategy allows for the calculation of difference to open in points, currency, or percentages. And as we've talked about before, points is mainly used for Forex, while the most commonly used way for crypto is in percentages or in currency. And you'll see that this is a trend here because the slippage input can also be set in points or percentages. So it's called slip input, and this is the slippage input. In the left bottom window, we have the open close difference table. And this table is important because it allows you to use different differences to open and different differences to close based on the time of day. So we're going to be adding some of the rules based on the intervals that we want. So by clicking the add button, we can do this. So let's try this. So in the opened window, here, you can see the start and end time for each interval, and note that for these parameters, the VPS local time is used. And we can set the difference open and close here as well that we're going to be using. So we'll click OK, and we can see that the rule has been added. And you also need to note that during the times set in this table, the times listed will take priority over the base difference to open and close. So it'll override your previous base settings for difference open to close. We also have the dynamic close option, and this allows the user to set the target profit, which will be used to close the deal instead of the difference to close. And like we've spoken about before, you can set this in the profit target, and you can set this in percentages or points. You have also the open diff and close diff fields. And here you'll have the approximate difference to open and difference to close, which will be used during the target profit to calculate it. And in this last group of options here, we have the trade available quantity, and we activate this when we want to check if there's enough volume at the top of the book to fill our order. And if there's not enough liquidity even on one side, the order will be set with the maximum volume available on either side. So basically how this works is if we have our order and we set it as one lot, and we only have liquidity for half a lot, then only an order for half a lot will be sent. So the order will basically be set with the maximum volume available on either side. And this is mostly used for crypto trading. The next parameter that we want to discuss is allow close if disabled. And this is an interesting parameter because by default, our program sends orders only for active pairs on which the enable checkbox is checked. So if this checkbox is checked over here, the program will close orders on difference to close even if the enable box is not ticked. So you have to pay close note to that. We also have the close multiple deals options. And if this is activated and there's more than one order on one pair, the program will close all orders under which the difference to close was achieved. And if the option is turned off, only the last of the orders will be closed. So if it's activated, the program will close all the orders on which difference to close is achieved. And if it's turned off, only the last of the orders will be closed. The show profit indicator allows to turn on or off the indicator on profitable pairs. Offset recalculation allows you to turn on or turn off the automatic offset calculation. And in the offset group, you can set a group for offset calculations. So if one group of pairs is offset calculated in a certain way, you can apply this to other groupings. So just to reiterate, you can turn it on or off. And in the offset group, you can actually set a group for the offset calculations. And you can apply whatever calculation of offset that you wish to all other groupings based on your preference. We know that the label is the identification of the pair, and you can set this basically to anything as a label for your pairs. And next, we can go back to the Instruments and Orders tab and look at the parameters here. So the first group of options is the hedging pair options, and it allows you to edit, and the clone option allows you to clone the pair. Likewise, you can see add allows you to add a new pair, and you can remove to remove the highlighted pair. The unblock option allows you to unblock a pair which was blocked due to any issues that the pair was having. And record statistics option allows you to record statistics based on the selected pair. And the statistic options can be read more about in our user guide, and more information is available there. We also have the close deals by market, which allows you to close deals based on the selected pair in the current market. Open deal manually allows you to open the deal on the current pair on the current price. The open close levels option is mostly used for crypto and allows for different entry parameters. And this is basically if you don't want to miss a possible order with a better price. And we say it's mainly used for crypto. And this allows you to set various different entry parameters. And this is when the arbitrage difference becomes even bigger even after you've submitted the order. You can add by clicking the add button, in which you can set lots, difference to open and close, and the slippage for these parameters. And here I would like to highlight two very important but different points. If you have multi-level turned on, then the settings in the multi-level will take precedent over these settings. So the multi-level settings will take precedence over these settings that we're setting here. And the second point is that the maximum number of orders for the pair must be the same as the levels. And if this is set higher, the program won't open all of the orders that are possible. Next, we have the reset max diff option, and this allows you to clear the max difference 1 and 2 values, so on one side and the other. So finally, let's move on to the general settings. And this will be the global settings of the program. We already discussed the label. You can set any identifier you'd like for the pair. In the session name 1 and 2, you can select the sessions which will be used on the first and the second side. As we already discussed, you can select these sessions which are used on either side. And it's very important for us to also discuss the session 1 and session 2 trading options that are listed below. They have the same set of parameters on each side. And let's take a look at what options we have here. So the first two are open and closing with open with limit and close with limit, and will allow you to open and close deals with limit orders, which can help control your slippage. In the type field, you can set the type of limit orders. They can be either FOK or IOC orders. And FOK are orders which are either fully filled or rejected. And an IOC order is an immediate or canceled order. And it's an order that must be executed immediately. So here you can see the FOK, and we can also select the IOC if we would like to. The next parameter is max delay. And if during the time that is set in this field, the program doesn't receive updated quotes, then arbitrage signals will be ignored until the refreshed quotes appear. And this parameter is set in milliseconds and is used to avoid entry on old quotes. So if the price is no longer what it used to be, the arbitrage signal won't be acted on. The TTL allowed to set, it allows you to set the order's lifetime in the frame XM bridge. But as they've added the bridge, they've already updated the bridge, the parameter is no longer used, so you can ignore it. Ignore triggers allows us to ignore arbitrage signals if they come from a change in quotes on the side that this is set on. So basically, it'll ignore any arbitrage signal if it's based on a change in quotes on the side that this is set on. And this is useful if one of the sides is slower and has basically inaccurate quotes, and you don't want to act upon those. The next option is if limit order rejected. And this allows you to see what the program does when a limit order is rejected. And you can set this to two options. You can either send the market order, or you can close the deal on the other side. So as you can see, we have those two options there. And the last parameter here is volume limit. And this allows us to set the allowed volume of deals on the side that we're setting it on. Lower, we have open and close method options, and these allow you to set the order of how positions are opened. And this is basically the orders and uh, how positions are opened and closed. So we have them set to open and close both by default. So the positions will be closed at the same time. We also have the ability to open and close side 1 and side 2 first, and this allows you to set which side of the orders will be opened and closed first. So the hedging order will only be sent after the program has received details on how the first order was completed. So if the first order doesn't go through, the hedging order will also not go through. So the hedging order is only sent after the program has received these details. And these options are useful, can be useful with tandem, and useful in tandem with limit orders. For example, on one side, you can have a problematic broker which rejects limit orders, or for example, you're using strict slippage settings. Then you can set the settings you need here and avoid paying the spread fees. We also have the ability to trail side 1 and trail side 2. And I will be discussing these next. So the trail side 1 and trail side 2 allows you to not close the deal based on the difference to open, but instead allows you to, when receiving the signals, trail the positions based on parameters set in the order management tab that was mentioned before. So instead of closing it on the difference to close, it closes it, it trails it after receiving the arbitrage signal based on the parameters that you have set. We also have some very common parameters that you can see in a variety of our programs. And the first parameters here are time to start and time to stop trade. And these basically allow you to set the times between which trading will occur. And I want to remind you for these parameters, the local VPS time is used. So you will need to set these based on the time of your local VPS. We also have a random close option, and this allows us to close orders with random pauses selected from 100 to 200 seconds. And this option is used to make sure that orders are closed in different time intervals, because we don't want to attract the broker's attention to our arbitrage strategy, so it can close it randomly. We also have time to stop close, and this will allow you to set the time in which orders will no longer be opened. The next is apply for close, and it allows you to open and close orders, which will be completed between the time and start, between the time to start and the time to stop trade interval. So if we turn this off, the orders will be open during the intervals, only during the intervals, but they'll be closed at any time. So by default, our opening and closing orders happen within the interval, but here, if we turn it off, the orders will be open during the interval, but closed at any time. We also have the max error. Here we'll set the max number of errors for a pair. For example, disconnecting or execution errors. And what happens is that if there are more errors than set there for the pair, this pair will be stopped from trading. So the errors cannot exceed the amount that you've set here. The minimum order lifetime sets the minimum lifetime of arbitrage situations. And the trading pause is the minimum pause between entering orders on hedging pairs. So order lifetime is the lifetime, and trading pause is the difference between opening up orders on the pairs. And this is set in seconds, and this is set for each pair separately. We also have the check news filter, and this allows you to turn on or turn off the news filter. And we have the option to trade or not to trade on news. And if check news filter is turned off, trading will happen at all times. So if you turn it off, then it'll trade regardless of news. So we also have offset recalculation, and this allows the user basically to set the parameters for offset recalculation. And I will discuss these in detail as well. This group of settings has everything basically you need for recalculating the offset. It has the period between recalculations. It also has the intervals that quotes will be collected for recalculation, the minimum ticks and units that you want to calculate it in. And we also have the option to show our results in log. We can either store or not store results in log. So here that is. And it's important to note that in the user guide, you can find much more about these settings as well in detail. So you should look at that as well. The automatic close of all lock parameters allows a user to set the days of the week and the time where the locks will be closed automatically. And the close pause allows you to set times between when the orders are closed. So you can set a day of the week and a time, and then set a close pause, which will allow you to set the times between the orders are closed. And you can check these boxes to receive sound notifications right here. And this will be done on orders and rejections. So thank you so much for listening, and subscribe to our YouTube channel for more informative videos such as these. Thank you so much for your time.